I am here just ending the 8 o'clock class, and we're going to start class by learning the first part, which is learning LCM and LCNRV. So look at illustration 9.1 on page 460 so that you understand when we apply LCM and when we apply LCNRV, okay? And I'm gonna go refill my glass of water, sorry, but I usually have about a 5-minute break. We just literally ended class. And then I want you looking at the illustration on page 461 of applying LCNRV. We're going to first do a problem after we discuss the concepts of LCNRV. So make sure that you understand what NRV is and then start looking at that illustration. And I'll be right back. Okay, good morning. Can everybody hear me?
Yes.
All right. Chapter 9, well, but chapter 8 was about initial measurement of inventory. You know, we learned what cost has to be capitalized for inventory. And then we learned the concepts of LIFO, FIFO, perpetual, and weighted average periodic. So we learned those concepts. In chapter 9, we look at subsequent measure of inventory. And we learned in chapter 1 that one of our secondary characteristics of accounting information is conservatism. And conservatism is that we don't want to overstate assets on the balance sheet, and we don't want to overstate net income on the income statement. The Securities and Exchange Commission has stated that the accounting profession are the gatekeepers to reliable information to the capital markets, to the investing public. You know, whether they're creditors or investors, the people that are institutions that are providing the capital resources for a company. So we take a conservative approach. In chapter 4, you learned about an expense called write-down of inventory. Well, now we're going to learn how we calculate that expense, write-down of inventory. And the overriding concept is that if the amount that a company can realize from selling their inventory, remember the amount that we realize is the amount we expect to collect. So if the company expects to realize an amount that is less than cost, then we need to write down our inventory. There are two approaches to how we calculate the write down of our inventory. One is LCNRV, which stands for lower of cost or net realizable value. Lower of cost or net realizable value. How do we calculate net realizable value? How is net realizable value calculated?
Isn't it that we have we estimate cost to sell by applying a predetermined percentage to the selling price, or is that just part of it?
No, that's it. Go ahead. So NRV, yeah, you're right.
Okay, yeah. So yeah, it says I think on page 460. Another way to think about NRV is it's the net amount that you expect to realize.
Mm-hmm.
For example, if the selling price of product A is $10 per unit and the company estimates that sales commissions and shipping costs average approximately 10% of selling price, the NRV would be $9. So it's the amount you could sell it for minus the cost that it takes to sell it.
Exactly. So if you look at the board behind me, we see that NRV is equal to our selling price minus any cost, this should be plural, cost to sell. Okay, so NRV is selling price minus cost to sell. Now the cost to sell can be sales commissions that we pay to our salespersons. It can be cost to transport, or ship the inventory to our customer. Okay, and you see that on page 460, as David said, that you read the last sentence of the first paragraph under LCNRV. NRV is the estimated selling price of the inventory reduced by reasonable predicted cost of completion, disposal, and transportation. Okay, so those are the types of costs that we can have to sell our inventory. So if we subtract the cost to sell it from our selling price, we end up with the amount that we would realize from the inventory. And if that amount is if that amount is higher than our cost, then cost is lowered and we would use cost. If our NRV, the amount that we expect to realize, is lower than our cost, then we're going to have a write-down of inventory. We're going to have a write-down of inventory. Now, when do we apply LCNRV? I know at the end of the year, but how do we determine whether we're going to calculate our write-down using LCNRV or whether we're going to use the LCM method?
Whether you use LIFO or FIFO, or however have cost.
Good, Alec. If a company uses FIFO or the average cost, or really any other method, and we're going to see there are other methods, any other method than LIFO or a retail method, they use NRV, LCNRV. If the company is using LIFO or one of the retail methods that we're going to learn in Chapter 9, then they must use LCM. So let's first do an LCM problem. And let's look at problem 9.2 on page 500. So let's look at problem, oh, wait, I'm sorry, I'm not finished with my discussion. We are going to do problem 9.2 on page 500, okay? Before we start, sorry, I didn't finish my talk about the concept. Look on page 461. Okay, so go to page 461. I'm sorry I had you on page 500. Go to page 461. And on page 461, we see that we can apply LCNRV or LCM either by individual item, by category. By category, we're talking about pools. You read in chapter 8 that we can pool inventory into like-kind items. And we could calculate dollar value LIFO by pool, because generally when we categorize them by like-kind items, it generally means that their gross profit percent is around the same. We know that gross profit percents vary according to what item we're selling. So we can do it by category or by pool of like-kind items, or we can do it by total inventory. Now, under IFRS, what method can we use under IFRS? Does IFRS allow us to determine our write-down of inventory? Can we choose among the three different approaches, either by total inventory, by individual item, or by category? I'm going to get y'all to critically read these textbooks one day.
Total inventory, but I might be wrong.
Isn't it by individual?
It is, Matthew. It's by individual, or whoever said that. It is by individual item. Okay. IFRS only allows it by individual item. There are some special circumstances where you can do it by category, but you can never do it by total. At the top of page 463, remember I always say, read the green, the global. Do what now?
So for GAAP, is it by, can you do by total?
GAAP, US GAAP, you can use either one of the three.
Okay, yeah, I got it mixed up then, sorry.
Yeah, under GAAP, you can use any one of the three.
Okay.
IFRS says by individual item, under special circumstances, and we're not going to learn those special circumstances. I don't even know those special circumstances, that you can do it by category. So in general, IFRS only allows us calculating the write-down of our inventory, if we have a write-down of inventory, by individual item. Another very important concept that we learned from the green on page 463 is that once we write down inventory, say I had to write down inventory because the amount that I realize is less than my cost, is lower than my cost. So I have inventory write down. Under US GAAP, you cannot reverse a write down. In other words, if economic conditions change, whether they're macro or microeconomic conditions, if economic conditions change and our amount that we can realize increases, and it increases to where it's above cost, then we cannot reverse that write down. Once we write down our inventory in US GAAP, it becomes the cost. Under IFRS, you are allowed to reverse write-downs. Important concept in that we're going to also see this concept with chapter 10 and 11. Chapter 10 is about initial measure of long-term assets. Chapter 11 is about subsequent measure of long-term assets. And we're going to see that if the fair value of our long-term assets is below our cost, then we have impairment loss. We'll learn this in chapter 11. But impairment loss, if we have an impairment loss, just like if we have an inventory write-down, in US GAAP, we cannot reverse that impairment loss. Under IFRS, you can reverse it. So this conceptual difference between US GAAP and IFRS with respect to having to write down assets because of cost being higher than a fair value is the same. We cannot do it under US GAAP. We can under IFRS, okay? All right, now that we understand those concepts, now let's go to problem 9.2. Problem 9.2, we need to calculate LCM, lower of cost, or NRV, and it's given us 5 products that are divided into 2 categories. And in this problem, they gave you what NRV is. You did not have to calculate it, okay? We will work a very quick exercise after this to make sure that you know how to calculate NRV, okay? So in this problem, they gave us NRV.
What was the problem again?
Problem 9.2 on page 500. You can work this problem, go ahead and work this problem. You can either work it by hand or you can work it in Excel, okay? So go ahead and work this problem. Again, they've given you NRV, so you don't have to calculate it. We'll work an exercise in just a minute. Now I'm going to be working the problem also. I'm going to work my problem in Excel. You do it either by hand or in Excel, whichever way is that you think that you would use it when you're taking the online exam. Of course, in the classroom, you would be using your calculator, okay? So I'm going to work the problem. In Excel. So let me bring it up. I'm sorry I didn't push out a template to y'all. When we get into LCM, I do have a template uploaded so that you don't have to take the time of entering in hammers and saws and screwdriver, you know. So So instead of working the entire problem, it's asking you to do it by all 3, by individual product, by total, and by category. Why don't y'all, for time's sake right now, just do it by total inventory, okay? So you're gonna have to multiply NRV times quantity. You're gonna have to multiply your cost by quantity, sum them up, and then compare the two. And then we'll work the other two methods. I've done it in Excel. Address, you got a question?
This one gives you said it gives us a net realizable value, right?
Right, so it gives you NRV, so you don't have to calculate NRV. We'll work a problem right after this where you do have to calculate NRV. I obviously want you practicing that. But this one gives you your cost, it gives you your NRV. So you just need to multiply by quantity, each one of them, total it up, and then see which one is lower. So that shouldn't take about 5 minutes, and I'll be right back. Okay, so what did you get for the what did you get for your total cost of all your 5 products?
415,000.
This is problem 9-2. So what did we get?
Total for all the products?
Right. So what is total cost for all the products?
6,080.
That is the total NRV.
I got
So
6,500.
I got 60, right. So 6,500 is your quantity times cost, and then sum it up. So 6,500 is your total cost. And then the total NRV is the 6,080. Okay. All right, I'm going to share screen because I've worked this problem where I've got the solution now with by category and by individual item. Okay, so in my Excel, you know, obviously I divided the 3 and then got a total by category, since we have to calculate it by category. And then I have the 2 products that make up the category of paint products. And then, of course, I did by the total. And I entered in quantity, which is quantity, and the cost, and the NRV, which they gave me. Okay. I didn't need this selling price because they gave me what NRV is. So I can delete. Well, I don't want to do that because of formulas that I have. So they gave us quantity, they gave us cost, and they gave us NRV. And I wrote in Excel, I wrote an if statement to determine by product whether cost or NRV, which one was lower. So this is also, I'm teaching you some Excel techniques in this class that you may have done in your Excel homework, may need some practice at. So I'll go ahead and delete so that we can understand what I did. So in LCNRV, because I want to know which one is lower by product so that I can calculate my by individual item or by product, my cost. I do equal, and then I do an if statement, and then I put in the logic test. So if my cost is less than my NRV, then I want cost. If it's not, if that statement is false, then I want my NRV. And then I can copy that down and copy it down. So here in Excel, using an if statement, we can determine by product whether cost or NRV is lower by just using a logical if statement. Okay. Then I simply took, when I'm recording it by individual item, I just multiplied it by its, well, I've got total cost at NRV right here, and I've got total cost at, I've got total cost and total NRV, I'm sorry, where I've multiplied the cost times the quantity. The cost times the quantity. So then I just did an if statement again, because remember, what's reported on the balance sheet is quantity times cost. Is quantity times cost. So I wrote an if statement again that said, here, let me write my if statement, that said, if cost by individual item, notice I'm doing at the individual item layer, if cost is less than NRV, then I want cost. If that statement is false, then I want NRV. And we can see that total cost is lower than NRV for my hammers. And I'm going to copy that down and copy it down to my 5 items that I have. And I see that when I sum that up, that LC, when I apply it by individual item, I end up that my NRV by individual item, so this is my NRV by individual item sums up to 5,800. When I compare it to my cost by individual item, we see that we have a $700 write-down. Okay. When I did it by total, remember we got the 6,500 for cost compared to the total of NRV, which was 6,080. When I compare the cost to the NRV, we have a write-down of 420. Now, if I do it by category, you see that I just summed up my cost by the 3 items in the first category and got 3,100. And then I summed up the cost by the second category and got 3,400. And the 31 plus the 34 does equal the 6,500 that we had determined was total cost. And then I did the same thing by NRV, the NRV by category. And NRV by category is 3,130 and 2,950. So I want to know what is the lowest by category. You can see that I again wrote an if statement, and we see that the 3,100 is lower than the NRV of that first category. In the second category, we see that NRV is lower than our cost. So when we sum up what is lower of cost or NRV by category, we get 6,050. And when I compare the 6,050, I don't know why I did it again here, but I did. When I compare the 6,050 to my cost, then we see that we have a $450 write-down. Okay. And when I do it by individual item, I think we've already reviewed that one. Individual item, I simply compared total cost times total inventory, total NRV. Again, these totals are where I just took the per unit price and multiplied it by the quantity. Okay. So then I know, because of the write downs that I have, that my journal entry by individual item is to debit cost of goods sold and credit inventory for 700. When I do it by total, I debited cost of goods sold and credit inventory for 420. And then by category, my write down was 450.
So when you're calculating by NRV by individual item, you get to choose, but which is like choose between total NRV versus total cost.
Right. So here I calculated what was NRV by unit cost. Okay, what was the lower by unit cost? And if I were to multiply, when I multiplied these by the quantity, I got oh, sorry, here's my NRV. So the lower cost of NRV, this column right here, is comparing it at the unit price level. In order to get my LCNRV by individual item, I multiplied it by the quantity here. So NRV times quantity is your total NRV. Cost times the quantity is the 500. So these two items, the total cost is where I took column B times column C. This one is column B, which is my quantity, times column E. Okay?
Okay, I mean, you just get to choose just because that's.
No, it's not just because. I have to know what by quantity, because remember, what we're reporting on the balance sheet is quantity times unit cost. So I need to know what is quantity times cost, and I need to know what is quantity times NRV so that I can pick the lower of the two, which is what I did here. So the lower of 500 compared to 550 is 500. Obviously, the lower between those two is the 1800. The lower here is 600. Okay, so when I'm doing it by individual item, I have to pick the lower of the two. So when I pick when I calculate the lower of the two, and then I sum it up, the 5,800 represents the total inventory at LCNRV by individual item. Okay? Does that address help you understand the question? Okay. So take a look. All I did was I took my total cost, which is unit price times quantity, total cost at NRV, and in this column, I did it by individual product and summed it up. In this column, I did it based on total of the category and picked the lower of the two. And then summed it up, and I've got LCNRV by category, which is the same thing I have here. I don't know why I did another column. And this is LCNRV by total. That I compared the 6080 to, which is the total of NRV times quantity time, and compared it to cost, and the lower of the two is 6080. So you're okay?
Are you gonna have to calculate each one of these on like
Yes.
a problem?
Yes. Yes. Okay, so I've got a question. Where did the 420 come from? The 420 came from, remember, cost is what is in my inventory account. Cost is what is in my inventory account. When I compare it to my total quantity times my NRV, I see that NRV is lower than my cost by $420. See, I compared J17, which is the total NRV, quantity times NRV. I compared it to cost. And I said, put the lower. See, I compared it to H, which is NRV. If G, which is total cost, is which one is lower? And the lower one was the NRV. So when I compare the 6080 to the 6500, I have to write down 420. The 700 came from comparing the 5800 to the 6500. This is LCNRV by individual item. And I see that I've got a write down of 700, the difference between the 65 and the 58. Okay. Maya, does that explain it? You're welcome. Okay, so that was done through chat. So take a moment and make sure that you understand, or you can take a screenshot. I will upload this, but I'm going to be uploading it into PDF for obvious reasons, because I've got all my formulas in there. Pardon me?
Could you upload like a template or something? I'll just make one in Excel. Never mind.
Well, I can tell you one of the things is you can copy and paste from PDF into Excel. So you could create your template by just copying in PDF, just copy this into Excel.
Okay, yeah, I just did everything in a notebook, so I'll just transfer it over. Thank you.
You're welcome.
Could you show the logical statement for by category? The LCNRV one. Yeah, that one. It's the same thing. Okay.
Yeah, I just compared, I just said, if cost is lower than NRV, then put cost. If not, put NRV. Okay.
Okay.
And then obviously the same thing for the second category.
But just comparing the paint products ones, right?
Right, the 3,400 to the 2,950.
Okay.
All right. So on this exercise, they gave you NRV. We didn't have to calculate NRV. So we compared cost to NRV times quantity at the individual item, and then determined our write down. Then we compared total cost by category to total NRV and determined the lower one. It doesn't matter which column you look at, they're both the same. I did it twice. And then summed them up and then compared it to my cost and then calculated my write downs, okay? So I just wanted you to see how to apply this either by individual item, by category, or by total. All right, now let's work so that we can get practice at learning how to calculate NRV, because we use NRV in the LCM calculations also. So remember, this is LCNRV, which is used for FIFO and average cost. So let's make sure that we know how to calculate NRV. Go to exercise 9.2 on page 492. Go to exercise 9.2, page 492. And see if you can, and calculate NRV. I want you to calculate NRV for each of the 5 products. Oh, I'm going to stop sharing. All right, and I'm going to pull up. Doesn't look like I did that one. So I'm doing this in Excel while y'all are, to make sure that you are know how to calculate NRV. So be calculating NRV. Now there you've got, it gives you what sales commissions are that are a percentage of selling price. And then it gives you shipping costs, which is a percent of cost. So be careful about that in your calculations. You doing it by hand or using Excel? Doesn't matter. Obviously, I think Excel is more efficient or quicker, but remember, you have to think about which way you're going to be doing it on the exam. How are y'all doing?
Good.
All right, because I'm going to be pulling up my Excel in just a minute. All right, so I'm going to go ahead and I'm going to share screen. Before I do, what did you get as the NRV for product A? What was NRV? How much?
1.
So the NRV for product A was how much?
81.51.
Okay, and did somebody else get anything different? What did you get for NRV for A? Let's have
52.
52,
I got 52.
51. Okay, 52 is the answer. What did you get for product E?
26.
26. Okay, so I'm going to share screen now. Oh, good. I'm going to share screen now. Let me get rid of this. And so what I did in Excel was, again, I'm going to teach you good Excel techniques here today. So it's slowing down the process of, doing the problems, but I think it's important also for me to teach you good Excel techniques. So one, notice that I put the sales commission percent and the shipping cost percent into what we call informational input box. And then I, had to put in cost and selling price. You can see that those are all hard coded. They aren't formulas, they're just given numbers. So then I know that selling price minus cost of disposal is my NRV. So look at how I calculated my cost of my disposal using cell referencing. So that what if my shipping cost were 6%, then everything automatically updated. Okay, so good Excel technique is using your input boxes so that all of my calculations, you don't see a single, when you see my calculations, you don't see a single hard-coded number. Now, why, looking at this formula, right? So you see that I did selling price, times the 10% plus cost times the 5% was how I calculated my cost of disposal. Why do I have the dollar signs in front of the 1 in B1 and the 2 in my informational boxes? Why do I have dollar signs? What do dollar signs do when we put them in our formulas? Y'all hadn't had to do this in an
Keeps them
Excel.
absolute.
Rounds the formula. Grounds that part you want.
It doesn't round it. It makes
No,
it,
grounds it.
It keeps it
grounds
absolute.
it. Yes, it grounds it. That's a great way of saying it. It grounds it. In other words, it will not copy relatively. Where you see I have C9 and B9. Well, here it's C10 and B2 and B10. And here it's C11 and B11. But notice that my B1 and my B2 did not change. I grounded it. I love that. That's grounded it exactly. And then so my NRV is simply selling price minus cost of disposal. Now, which one is lower? So I can visually see that my NRV is lower than my selling price. And I could hard code that and put in the 52. But if I wanted to use this as a template, I would use the formula. What formula would I use? So if I want to know which one is lower, cost or NRV by individual item, what would I do?
You do an if formula.
I would do if, exactly. If equal, if cost is lower or less than NRV, then I want to put in cost if that statement is true. If that statement is false, I want to put in the NRV. And then I copy it down and I, get the $80 is lower than the 86. So I know that for each of my products that my lower of cost or NRV are those numbers. Okay. Now on this one, we don't have quantity, so we can't calculate what would be reported on the balance sheet, but you know how to calculate NRV. And we know it's selling price minus cost of disposal, but I wanted you to see how to efficiently use Excel. Is everybody cool on this one?
Yes.
All right. So now let's take a look at LCM. And LCM is the method for determining our inventory write-down when we use LIFO, or one of the retail inventory methods that we learned about in Chapter 9. So let me save this. This is exercise 9.2. Solution, and that'll be fine. Okay, so go into course content information. Go into course content information, and you will see that I have uploaded an LCM problem. And I've uploaded the template for it. Now, the template I've put into the template all the information that you will need. So you don't need to split your screen with having the problem and the template up. So I am going to pull up the template. Sorry, I'm having, what do I do with my template in my LCM? Oh, I see what I did. I wrote it with solutions in it. All right, let me delete what I had calculated. Okay. Sorry, I had saved the solution over my template. Okay, so I'm going to start sharing with you. And let's work this problem together. So do you see, is that the template that we had? So in the problem, it said that my sales commissions were 4% and that my normal profit margin was 43%. So I put those in my input into that's the information that I put into those inputs in cells. Now, with respect to LCM, go to page 465. So go to page 465. And on page 465 is the excerpt, the illustration that you went through when you read the problem. Remember, don't forget to critically read, go through these illustrations and make sure that you understand where the numbers come from. Now in LCM is lower of cost or market. And I am calling the M in market designated market. And you'll understand why in just a minute. In LCM, we have to know what NRV is. And we just calculated NRV. We know that NRV is the selling price minus our cost of disposal. We refer to that as the ceiling, okay? Then we also have to calculate the floor. And you can see this on page 465. It's the calculations in the bottom half of the illustration. You can see that we also need to calculate what's referred to as the floor. The ceiling and the floor means that my market in the LCM, the M that I call designated market, the highest that the number will be is NRV. The lowest that it will be is NRV minus NPM, which is normal profit margin, okay? So that's the reason that we refer to it as the ceiling and the floor. So we need to calculate NRV, and we need to calculate the NRV minus our normal profit margin. So my NRV, remember, is my selling price minus my selling price times my sales commission. So my NRV.
Would you ground the sale commission?
Yes.
Would you make it absolute?
I need to ground it. I do need to absolutely ground it. Thank you, Nelson. I think that was Nelson. I recognize that voice. So yes, I do need to ground that number. So my NRV for product N, does anybody get this? Why did I call my products NOLA?
New Orleans.
That's it. That's the New Orleans, Louisiana. If you ever want to read news about New Orleans or what's happening in New Orleans, just go to NOLA.com. All right, so I had to bring my Louisiana culture in. You know, I'm proud of my Louisiana culture, although it's a low socioeconomic state. It's all right. So then I can just copy this down because Nelson reminded me to ground my B1, you know, where I've got the 4%. And we've calculated NRV for each of the 4 products. Now I need to calculate my floor, which is my NRV minus my normal profit margin. Now, my normal profit margin is selling price times the 43%. And I'm going to go in and ground the two so that I can then copy it down. So my floor for each one of the products is the 129.85, the 170 for each one. My replacement cost is given. Replacement cost would be, if I go out and buy the product today, what would it cost me? Obviously, that is the fair market value. Not fair market value based on selling price, but fair market value to this retailer for being able to, you know, purchase it at wholesale, okay? So what is my designated market? As you read on page 465 for you know, number 5, you see where it has the 5 in parentheses, that your market, which I call designated market, because when we think of market, we normally think of the fair value. Well, is fair value meaning the selling price? Does fair value mean the replacement cost? Well, we see here that it's neither one of those. That, if you want to go read the GAP logic reason behind it, you're more than welcome to. But GAP says that we're going to determine market by picking the middle number of the three. I can see that 235 is high, 129.85 is low. So literally the middle number is the 180. Now, I don't want to hard code that into each one of these. This is an Excel technique. In case situation changes, I want to be able to just change the numbers, you know, for replacement cost or selling price, and it automatically update. So my designated market, since I want the middle number of 3, I'm looking for the median. So I'm going to say equal MED, median, and I want the median of these 3 numbers. And then copy it down, and we can see that because my formula is correct, that we had already determined that the middle number was 180. When I look at O, I can see 182 is high, 100 is low, and the 177 is the middle number. Now, I make these problems up just by picking numbers off the top of my head. It is just coincidence that the middle number for each one of these is replacement cost. Obviously, that is not always true, and you can see that in page 465 with A, B, C, D, and E with the example on page 465. So it is just coincidence because of the numbers that I picked out of the top of my head that my market, the middle of the 3, happened to be replacement cost. That's obviously not always the case. Well, because the questions that I asked are, I want to know what would be reported on the balance sheet if I did this by individual product or I did it by individual total. So I'm going to have to multiply these by the quantity. So I want to take my designated market, because remember, now I want to compare cost to designated market. So I'm simply going to multiply quantity times my per unit price. And then when I sum, I get that when I say total cost, I mean total price or total at designated market. So my total at market is 138,690. Now I need to know what is my total by cost. What is my total by cost? So that is simply quantity times my cost, and add it down, and then sum it up. And I know that my cost, which is what I have on in my general ledger, is 145,775. So if I were doing this by total inventory, okay, this can be entire inventory or, total inventory, I would compare total market to total cost and determine which one is lower. So here I'm going to write an if statement. So if cost is less than market, then put cost. If it's false, put my designated market. And of course, we could visually see on this one that my designated market is lower, and that is what I would report on my balance sheet. What would my write-off be? How much would my write-off be?
Yeah, 7,085. Yeah.
Right, the 7,085, the difference between the two. The difference between the two. Okay.
I have a question.
Sure.
Would you always put the total cost at designated market first, or could you do it the other way around? I mean, I guess the other way around, it wouldn't come out negative though.
Oh, I did it negative because I wanted to compare if my designated market was, if I ended up with a positive number here, then I don't have a write down.
So would it be safe to say that you would just do it like that every time, like do
Yes.
designated market first and then
Right.
subtract that from the total cost?
Yes, so do your market first and then subtract cost. And if you end up with a negative number, you know that you have to write down.
Write
If
it
you end
down.
up with a positive number, then you don't have to do anything. You don't have to write down.
Okay.
Okay, so that's the reason that I did it in that order. Now let's take a look at individual product. So by individual product, I want to compare, instead of comparing in total, I want to compare at each individual item. See, I could have, I could have this over here and then delete this column if that makes it easier. So now I want to do it by individual product. I want to know which one is lower, my quantity times my market or quantity times cost. So again, I'm going to do another if statement. So if cost is lower than my market, I'm going to put in cost. Otherwise, put in my market. And then I copy it down, sum it up, and we get that lower of cost of market. When I look at it by product, is 136,460. So I'm going to want to compare it to my total cost to determine if I have a write down. So equal it by market minus my cost. Now, this one I want to write my if statement because I'm trying to determine. So if my cost is less than my market, put cost, otherwise put market, and I did that earlier. So if my cost is less than, I forgot to put a comma, market, comma, then put cost. Otherwise, put my lower of cost or market. And we see that what would be reported on the balance sheet would be 136,460 because it is lower than, because that's my lower of cost or market. The amount that I would write down would be $9,315 would be the amount that I would write down if I was doing it by individual product. Now, under IFRS, which one would I have to use?
I have another question. I'm sorry.
Sure, Nelson, not a problem.
Just like formula based. For the LCM by product, the negative 9,000 that you just got, you put it with the 136,000 that you just got over here.
Mm-hmm.
Would you use the one that you have highlighted right now, or would you use the one that you just made over here in the LCM section? I guess it's the same thing.
It's
but,
the same thing
never
because
mind,
this one is right. It's the same
yeah,
thing.
but that's an if statement. So if like that one goes the other way around, it would mess. I guess. Never mind.
Yeah, you would have a positive number here.
Yeah, because it would flip it if it was
Right. So you would
different.
have a positive number and then you would have no write down because we never write it up.
Yeah.
Write it up.
Okay. Awesome.
Okay. So now under IFRS, how would I have to do it? How do we, what does IFRS require us to do? Can we do it by total inventory, category, which we didn't do in this one, or by individual product?
We have to do it by individual product.
But you have to do it by individual product. So under IFRS, it would be, I wrote an if statement. Well, I could just say equal. And this would be equal that minus cost and the 93.15. All right, so under LCM, which is the method that we use to calculate how much inventory we have to write down, we can do it either by total or by individual product. Under LCM, the M is the middle number between NRV minus a normal profit, and replacement cost. So you have to pick the middle number of the two for your market, which again, I call designated market. It's not referred to as designated market in the textbook, but the reason that I'm choosing to do it is so that you understand that it is a calculated number, which is simply the middle number of the three. So now I compare market to cost in order to determine which one is lower, okay? And that is what we did here was determined which one is lower after we had multiplied it by quantity. So does everybody understand the concept? Can I have of that? Under LCM, we have, the M is not NRV like it is for FIFO and average cost, that we've got some more calculations to do, which calculate NRV minus your normal profit margin, and then replacement cost you're given. Determine the middle of those three numbers, and that becomes your M that you're going to compare to cost in your lower of cost or market. So is everybody good with that?
Really quick, I'm sorry. LCM by product is just, would it be the ceiling times the quantity?
No. It's designated
I had to
market.
step away for a second. That's why I understand total cost and total designated market, but
Okay, no, your LCM by product is, I'm comparing cost to my designated market. So I'm comparing it to,
okay. It's just picking the lowest, just like, okay. Yeah,
right,
I'm
which
sorry.
one of these is lower, 54, 63?
It was just like the last problem. Okay.
Which one is lower, right?
Okay.
But, you know, since I want to use, since I'm doing Excel and I'm trying to teach y'all Excel efficiency, I'm also teaching you the if statement and then how I can use the median statement to choose the middle of the three. Because if I hard code this and then say selling price changes, then the floor might be the middle number.
Yeah.
So I don't want to hard code. I want to avoid hard coding in Excel. So that is the reason that I create these information input boxes. What if sales commission changed to 6%?
Everything else will change.
Then you watch how everything changed. Obviously, my total cost isn't going to change. My NRV changed. My NRV minus the normal profit, I didn't change it enough. We still ended up with designated market being, but you see how everything changed. What if my profit margin was 55?
You're calculating your floor in the end to find your designated market value.
I have to calculate the ceiling, the floor, and I don't calculate replacement.
You're calculating the floor and the ceiling to get the designated market value, and along with your replacement cost that you're
Correct. I have to calculate the ceiling, I have to calculate the floor, and then I have replacement cost as a given, because I have to pick the middle of those three as my market that I'm going to then compare to cost. What was
Is total cost always going to be higher than the other two?
I hope not. No. Because absolutely not. It ended up this way because I wanted y'all to see how to write it down. Okay.
I do have a question.
So let me finish with that question, and Nelson, then we'll come back. So
Okay.
no, companies are not always, you don't have write downs every year. You only have write downs when there has been an issue. Let's say, let me just change this selling price. Let's say that the selling price of this is $300. Okay. So let's see if the LCM by product change. No, let's say that my selling price, let's just make it $600. Then you see how my LCM by product, that my market is higher and then my cost. You see how now I would have to write it down by individual product, but in total, because I only changed one number, one selling price, that I end up with a positive and wouldn't write it down. Okay, because my selling price is so much higher, meaning that the market is higher. So no, total cost is not always lower than not always higher. Sorry, not always higher. It usually isn't. I mean, companies hopefully are managing their inventory so they don't have a write down. You know, does that make sense?
Yeah, it does. But in this scenario, since we are writing down, total cost would have to be higher, right?
Right. Let me just, for fun, let me change the selling price on all of these to higher selling prices. So I changed the selling prices to, on all of these,
You got it exactly equal.
It went null because your LCM by product and your total costs are exactly the same. That's why that just went null. It just so happened that the numbers.
You're right. I can't imagine how that.
You have magical numbers.
I have
Yeah,
magical
that's right.
numbers. Because the designated, yeah, I got magic numbers. Let me figure out how that happened. Oh, no, it's not magic, because on all of these, it's not magic, because on all of these, my LCM by product cost was the lower, because I made my sales prices so high that my cost is, my LCM by product, my cost is the lower of the two. Do you see that?
Oh, I see. Because you're choosing the lower number.
Right. So obviously you have to choose the lower of number, lower of cost or market. So since cost is the lower on all of them, total cost and total LCM by product are going to be the same, and there is no write down because cost on every single one of them was lower. Let's look at one where I've got it mixed. Let me reduce this back down to say that my selling price on this is 200. You know, then this is the only one where the market is lower, and I would have to write down by individual product. I wouldn't have to write down if I did it by total inventory. Okay, but do you see the advantage of how I just changed my cost or changed my percentages? And because everything was a formula, it updated automatically.
So my question was, in any of the questions that we get for this, will we ever have to calculate any of like the numbers we're technically supposed to be given? So like cost, replacement, selling, quantity,
No,
like that stuff?
No.
So we'll always get those numbers and the
Yeah, I've
percentages
got
as
to
well?
give you quantity, I've got to give you cost, I've got to give you selling price, and I've got to give you replacement cost.
And the percentages as well, right?
Oh, yeah,
Okay.
right.
Okay.
So let me get this back to, so I don't upload the, so did we end up with all the same numbers now? Are those the only ones that I changed? Yeah. Okay. So on lower of cost or market, yeah, I already had done that. So on your lower of cost or market, you have more calculations to do. I know I'm repeating this for about the third time, but you have to calculate NRV, the ceiling and the floor, and then you have to determine the M in LCM. You have to determine it by picking the middle of the three. And then in order to determine what's reported on the balance sheet, you have to remember to multiply your per unit cost times your quantity and then get into your comparisons. Okay? So that is LCM and LCNRV. So if you had a problem that said a company uses LIFO, what amount would be written, what amount, if any, would be written down for inventory? What method would you have to use?
For what again?
I said, the company uses LIFO, determine what amount, if any, would be written down for inventory. Which method would you use?
You'd use this LCM method.
Right, you'd have to use LCM instead of LCNRV. Obviously, LCNRV has less calculations because you only have to calculate NRV and then compare it to cost.
So this is like how you do a write down for FIFO, and then the second method is how you do it for LIFO.
Right, so LCNRV is FIFO and average cost.
Yeah, average cost.
LCM is LIFO and retail methods, and retail methods is what we're going to address now.
Okay.
Okay, so I'm going to stop sharing. And look at page 467, which we're entering into part B. In chapter 8, we learned using actual numbers. We learned how to calculate ending inventory and thus cost of goods sold under LIFO perpetual, FIFO perpetual, weighted average, periodic, and dollar value LIFO. Okay. Now we're going to learn how we can estimate ending inventory instead of using the like what we did in chapter 8 was using, purchases, unit price of each purchase that we had under LIFO, FIFO, and weighted average. And then we used an index based on the actual cost changes that we had for the inventory that we purchased. Okay. Well, there are 5 methods, and I want y'all writing these down because we're going to conceptually talk about the 5 methods today, and we're going to number crunch them on Tuesday. The 5 estimation for estimating inventory methods that we have are: 1 is the gross profit method. That's on page 467. The second one is the average retail method, which is on page 472. Now, these page numbers that I'm giving you are where they demonstrate how to calculate it. It's not the conceptual. You'll have to, you should have read that. So the calculations for the average retail method is on page 472. The third method is the conventional retail method, and that is also on page 472. So the conventional retail method on page 472. The fourth method is LIFO retail method. Let me go back. The gross profit method, the average retail method, and the conventional retail method are approximate FIFO. Approximate FIFO. Okay, or FIFO with using average cost. And you'll see why I use that term when we get into the application. LIFO retail is obviously a LIFO method for estimate if a company uses LIFO but is estimating. The fifth one, and I don't know if I gave you the page number on the LIFO retail method is page 474. On page 477, we get into the granddaddy of all calculations for inventory, and that is the dollar value LIFO retail. It's a mouthful. Dollar value LIFO retail. So now let's talk about the 5 methods.
What was the page number for gross profit one more time?
The gross profit method is on page 467.
Thank you.
Yeah, and 468. You're welcome. The gross profit method is where you're using the average gross profit of a company. Now, this is the average gross profit on all the products that they sell. So you're taking the average gross profit that a company has and then calculating what cost of goods sold would be by applying 1 minus the gross profit percent. So if my gross profit percent is 45, then my cost of goods sold is 55%, right? To add up to 100. Net sales minus cost of goods sold equals gross profit. So when I'm using the gross profit percent, the average gross profit percent, we're using the average gross profit percent of all the products that they have. And I can take 1 minus the gross profit percent, and 1 minus my gross profit percent gives me my cost of goods sold percent. And I can then determine what revenue is. And then revenue times my gross profit percent gives me cost of goods sold that I can then subtract from goods available for sale to get ending inventory. And that's what that is all about. Now, the problem with gross profit percent is that it is not very specific at all, because we're using a gross profit percent of all the products. There is no specificity, enough specificity in calculating it. So GAAP says you cannot use gross profit percent to estimate ending inventory for financial statement reporting purposes. The gross profit percent is used if there's been a big theft, there's been a big fire, we've lost accounting data, we've lost our ending inventory. insurance companies will use it to estimate what a loss would be. Say my warehouse burned down that has all of my ending inventory in it. I could put together some beginning inventory plus my purchases to figure out available for sale, and then estimate ending inventory by using my gross profit percent. Because it doesn't have enough specifics in it, GAAP will not allow you to use this estimation method for financial statement reporting purposes. We will not learn the calculations for the gross profit method. You can practice it because it's a great intellectual process for, you know, understanding the application. It's a great intellectual process. The 4 other methods you can use for financial statement reporting purposes. And these are the RIM methods, Retail Inventory Methods, RIM. These are the RIM methods that companies can use where they're estimating ending inventory, but because the calculations are more specific, GAAP will allow them to be used for balance sheet reporting purposes. The average retail method, again, is FIFO, and we can use that method as it's on page 472. The conventional retail method takes into consideration, because of the calculation of what we're doing, is we have to calculate a cost to retail percent that you read when you read the chapter. The conventional retail method, the way that we calculate our cost to retail percent, will give us a better approximation of, remember this is FIFO, so it gives us a better approximation of ending inventory, taking into consideration LCNRV. And you can read that information again on page 472, where it talks about the conventional retail method. Okay, and it discusses that it better approximates inventory at LCNRV. Okay.
So can you real quick say like why they don't include markdowns under conventional retail? Like,
yeah, they don't include markdowns because they don't include markdowns to estimate, to calculate your cost of retail percent. And that is the way that that's when we exclude markdowns, then mathematically we are ending up with a number that is approximating LCNRV. Because when we have markdowns, that means that we had to reduce our selling price. Markups are when when our selling price is above what our normal selling price would be because demand is high. So when demand is lower, which can affect the value, the fair value of or the replacement cost of our inventory, or the NRV of our inventory, when we exclude markdowns to calculate our cost to retail percent, you will see that you will end up with a lower ending inventory number compared to the average retail method.
so could markups be like, you know, if a car dealership charges over sticker,
Yes,
there's demand, so they mark up, they raise that price?
exactly.
Okay, thanks.
You're welcome. So markups are when we have demand high, we can charge more than what our, say, list price is. Markdowns are when we have to put it on sale.
Mm-hmm.
And you can see an explanation of that terminology on page 470. Okay. Now the retail, the LIFO retail method is where we're using LIFO. And remember, in LIFO, we have to be very aware. Remember, in DVL, we have to be very aware of our layers, because what our layers in ending inventory, because our layers can make up older prices in LIFO. So what happens in the LIFO retail method is we are calculating a cost to retail percent for each layer. Now, the problem with the LIFO retail method is it assumes that prices remained stable during the year. So the retail inventory method assumes that prices remain stable during the year, which is not usually a good assumption to have, because we know that prices change during the year. So because of, now if prices do remain stable during the year, then use the LIFO retail method. If you're using LIFO, use the LIFO retail method. However, if your prices are not remaining stable during the year, then you need to use the dollar value LIFO retail method. And the dollar value LIFO retail method is a combination of DVL using price indexes that you learned in Chapter 8 and the LIFO retail method, where we're calculating a cost to retail percent for each layer. So you can imagine the complications of the calculations that we're going to get into. You can see the dollar value LIFO retail method on page 477 and 478, following those calculations and understanding that we're using what is the price index for each layer and calculating the cost of each layer using a cost to retail percent for each year. And each year is a layer, just like in DVL. Okay? So please understand those concepts so that on Tuesday, when we get into the application of it, the number crunching, you understand the concepts. Also, look at some end of chapter exercises and problems that for the 4 methods: retail, average retail, conventional retail, LIFO retail, and dollar value LIFO retail, and attempt them, so that when we are doing them on Tuesday, any issues that you have with practicing, and look at the solutions that I have uploaded. And if you can't figure out the why you got it incorrect, when we go through it on Tuesday, the details of these major calculations we're going to get into, then you can better understand. So please be prepared so that when we're going through these calculations, I will push out, we're going to work out problems, and I will create Excel templates for the problems for you. So we will have those templates, but I'm not going to put the calculations in the templates. We're going to work through them and do them together in class on Tuesday, and then wrap up Chapter 9. On Tuesday, you are going to have a quiz on Chapter 8, which is LIFO, FIFO, perpetual, weighted average periodic, and of course DVL. These will be calculations, because the quiz that we do when we start the chapter is just on concepts. The quiz after we have done it is on calculations. So you will have a quiz on Chapter 8 doing calculations. And then I will have And that's it. We'll be finishing 9. So you'll have a quiz on chapter 8, and we're going to number crunch those 4 retail methods.
Is the quiz on Tuesday?
Pardon me?
Is the quiz on Tuesday?
Yes, the quiz is on Tuesday for chapter 8. There is no quiz on chapter 9 right now.
Okay, thank you.
No quiz on chapter 9, just on chapter 8 calculations, DVL, LIFO, FIFO, perpetual, and weighted average.
Will we get extra time for this quiz?
The quiz is going to be where, you're not going to have 5 years of DVL. So the quiz will be, I will allocate appropriate time for the quiz when I make it up based on the calculations that you're having to do. Since it's not just a conceptual one, I know it's going to take more time to do calculations. So Nelson, I'm not going to cut you short, I promise.
Okay.
I am aware that you're doing calculations, and you'll be doing them on your calculator. I assume if you can do it, quicker in Excel, then do it quicker in Excel.
Fair enough. Now, I do have a question on the
Sure.
exam. Whenever that comes around, are we gonna have to a problem like we did on the Connect homework?
Yeah, so the only difference, like I went through the Connect problem with a student, and on the Connect problem, instead of the index being given to you, you had to calculate the index. Well, was it hard calculating the index?
Not necessarily the index, just like all the extra stuff. I was so lost. I ended up just giving up because I'm like, you know what, this ain't it.
Okay, then I want you to schedule an appointment with me so we can go through it. Okay.
Okay. Because I struggled.
Okay. Well, if you struggle, then that means you reach out to your professor for help, right?
Yeah.
So I think I've already posted office hours for next Wednesday.
I'll check
So
them
sign up and we'll go through it together.
Okay, cool.
Can I have a clarification on that? Are you talking about the second one with like a ton of?
Yeah, the one that was like 50 questions in
Oh,
one.
no. That wasn't a DVL question.
Oh, that's the problem I'm talking about. I understood the first one. The first one was fine. That second question that was like 50 problems, and I was so lost.
To do.
No, you shouldn't have been lost on it. It just should have taken.
It just took like 4 hours.
Right. This is one of the things is because chapters are silo learning. I learned this. Well, we call it in pedagogy, it's called interleaving, where I gave you a problem where you had to use
everything from before
that you had already learned just to make sure that you're remembering them.
Mm-hmm.
So that's what that was. I wanted you to be, to use concepts that you learned from chapters 1 through 8 so that you're not forgetting them, because silo learning, is difficult. You need to be able to, interleave it all together to make sure that you understand everything that we've learned today.
Yeah.
The body of knowledge. So that problem was for body of knowledge. Of course, I can't have one like that on the exam because then I wouldn't be able to test all the topics in the time given.
Yeah. Okay.
Oh,
That's what I was worried about.
I thought you were talking about the DVL.
Sam.
No, the first problem I was fine with. Like I got that down good.
Okay.
It was just that when the second problem came out of nowhere and there was like 50 different problems, I was like, wait, hold on. I panicked. I was there for like 4 hours and then I just ended up saying, you know what, screw this. Gave up on it.
Yeah, no, don't give up on them.
It just gets frustrating spending so much time on one question, and then every time you do check my work, everything is just red.
Right, and that's that flow through, where when you do adjusting journal entries, then your financial statements are going to be wrong, so you got to correct the adjusting journal entry.
Yeah,
and
it just got really frustrating, and you only get 2 times to check work, so then after those 2 times, not being able to continue checking to see if you fixed it or not.
Right.
It just started getting frustrating. So I just submitted it and said, yeah, whatever. I went to bed.
Well, one is, don't start them so late, but anyway, that was just one where, again, as an educator, we've got to make sure that you're remembering the whole body of knowledge.
Yeah,
and
remembering
I can't
everything.
do that on an exam, so I have to do it, within
homework.
Within homework.
Yeah, that's fair enough.
So that's the reason, because siloed learning is just silo learning. And then, can I put the whole body of knowledge together? And that, of course, is what the goal is. All righty. So see you on Tuesday, where we'll be back in silo learning. Okay, Nelson?
See you then.
All righty. So we'll be back in silo learning. I'll send out, information reminding you about the quiz, Chapter 8 quiz, and then I will create templates. So for the application of the problems that we're going to work for the 4 retail methods that we're going to learn.
Okay. Really quick question.
Sure.
For Chapter 8, when we went over LIFO and FIFO, I mean, it was mainly just the net method and gross method, correct?
Right. So you had, and that's on there too, that can on the Chapter 8 quiz. So you had net method, gross method for recording inventory, and then you had LIFO, FIFO, perpetual, weighted average, periodic, and DVL.
Okay.
So those are all the things that were in 8 that, could or could be on the quiz.
Okay.
But yeah, I didn't mention gross and net, just assuming you remembered it.
Okay, that just seemed like majority of what we did. That's why.
Yeah, no, gross and net, LIFO, FIFO, perpetual, weighted average, periodic, and DVL.
Okay.
All righty. Just trying to keep y'all, I don't want you studying for the final exam. I want to keep, you being assessed on it so that you don't get, just assessed on the exam itself, that you've had practice at assessments.
Oh, I did have a question, I guess. I mean, I don't know if this is kind of more of a personal one, so I don't know if I should set a Zoom meeting or something with you, but my other professor told me that depending if you want to do a 4+1 program for accounting, that you might want to consider not doing unsatisfactory, satisfactory.
That's right. That email came out. Yeah,
I had the same question. I'm in his class.
Right. And because I asked, I don't know whether I was the one that stirred the pot on that or not, but when this whole SU thing came out, my first question was, well, can accounting majors, if they're going to get a C or above, can they choose SU? Because if they have an S and the prerequisite for accounting 420 is a C or better, can they choose SU? Well, the answer is yes, you can. But then it got into the questions of, okay, they go to apply for grad school, and grad school, if you're going into the Masters of Accounting, is going to want to know what your accounting GPA is. So I asked that question. Well, then they had to go to graduate programs admissions to ask this question because, when you change such a major problem, a major policy like this, then the implications that are everywhere throughout. So we got that email probably the same time you did. So let's look at that email and let's talk about it. Talk about it with your advisor. And if you're at my advisee and you've got a question about it, let's talk about it. Because if you want to apply for grad school, especially if you're looking for a master's in accounting, then they're going to look for those accounting GPAs. Now, if you're going to make less than a C in your major, then I recommend that you do SU and just repeat the class, because for grad school, you're going to, want the letter grade, and you're going to want C's or better anyway going through grad school. Do you see what I'm saying? So if you're going to make anything above a C, I recommend you take the letter grade.
Okay.
Yeah, I may want to email you about that too, because
Not a problem. Just email me and I'll be happy to answer questions. So just email me. And if we can't do it through email, then we'll set up a Zoom meeting.
Yeah, and you're gonna post the final grade on May 8th or 9th?
I'm going to post it no later than May 10th, and y'all have to make the decision by May 11th.
Okay, so maybe after my final grade comes out, I could like give you an email or call and like ask what you think. You know.
Right. So you don't make the selection with me. Y'all are getting the emails on how you notify the registrar what you're choosing.
No, I just mean like what I should do in terms of like.
Oh, exactly. I will be posting
You know what I
letter
mean?
grades.
Because
No
I do want to
later-
get my MBA, so yeah.
Right. I will be posting letter grades no later than May 10th, and you have to make your decision by May 11th.
Okay, thanks. Yeah.
So you will definitely have your letter grades so that you know
Yeah,
what decision to make.
Yeah, thank you.
You're quite welcome. All right. I am here. I know it's tough, and I am here. I'm trying to teach intermediate at a level you need to learn it, but also being sensitive to we're not physically able to come into my office and talk about these things. So trying to be as available as I can through setting up Zoom meetings, set up for my office hours. If you really want to meet with me outside my office hours, just send me an email and we'll just schedule a Zoom meeting.
Okay. Thank
Okay.
you so much.
And again, if
appreciate
you're
it.
struggling through, Nelson, if you're struggling through a problem, now not that whole big problem, then email me and we'll go through. Edris, wasn't it you that we sat through and just
Yeah, we went through the DVL. Yeah.
right, we went through DVL. So just reach out to me.
For anybody else that's still in the Zoom meeting, if you guys want to jump into a study group with more students, I posted my number in chat, so you guys can just send me a text message.
Okay, thanks, man.
Yeah, because
Appreciate it, Nelson.
yeah, y'all can set up
we
Zoom
appreciate
meetings among one another to have study groups. Did y'all know y'all
Okay.
have the ability to set up Zoom meetings?
Yeah.
Yeah, so you can set up
definitely
Zoom
open to doing that
meetings,
with some people.
among one another.
Okay. I appreciate it.
All righty, yeah, for
Have a
study
great day.
groups. Y'all do, I recommend study groups.
Yeah, they help a lot.
They do, they help a lot. So set up Zoom meetings among one another.
Have a good weekend. See ya.
Thank you, y'all do the same. Bye-bye.
Bye, everybody. Thanks.